Trust distributions. I'm warning you guys, just be very careful if you're trying to backdate your trust distribution resolution minutes. Now, you guys should be aware that on or before 30th of June every year, the trust needs to actually do the resolution minutes, and they need to basically say who is presently entitled to the trust income, trust estate income during the financial year, and who are the present entitlement to which beneficiaries, and so forth. So recently, I would not name, but I've seen some issues in this space. A lot of accountants and advisors or whosoever are involved, what they're doing is they're trying to backdate the trust distribution resolutions. And I'm going to refer to a couple of my notes here. This is where I think you need a trusted tax advisor, a wise tax advisor who work with you guys to understand the legal interpretation of the trust law and aligning with the taxation law. Now, there are recent high-profile examples being reported where there are failed trust distributions are done. So, for example, OE versus JJ Nominees Pty Limited, that's in 2022, where beneficiaries who had not benefited from trust distribution to their favor were able to demonstrate a failure of the trust distribution to discharge its duty in exercising its discretion. Another one was Estate of Stangaleo, which was centered on the failure to properly identify potentially beneficiaries. Benaron Pty Limited versus Lamar and others, which involved distributions from a discretionary trust over many years to recipients who were not in fact valid beneficiaries of the trust. This is another issue. Doma ACT Pty Limited, where limitation in the software package generating the trust distribution resolution saw the wrong entity listed as a recipient that would have triggered excess tax of over $10 million, or probably say 10 million distribution. The last one, the trustee for Whitby Trust and Commissioner of Taxation in 2019, where multiple failures to comply with basic governance and trust deed provisions saw attempted distribution held to be invalid. Now, from the tax perspective, it is generally widely understood that the trustee of the distribution, I would say the trust, the discretionary trust, must make a valid distribution, income distribution by 30th of June in the relevant financial year, or earlier if mandated by the trustee. Subject to an effective default provision under the relevant trust deed, a failure to ensure a valid distribution by 30th of June each year will mean the trustee is taxed under Section 99 of the Tax Act. Now, what does that mean is that the trustee is taxed on undistributed income and capital gains at the top marginal tax rate with no access to the CGT discount regime if it's not properly made. Trustees in this situation can claim input tax credits as an offset subject to the integrity rules. However, they are ineligible for refund of excess input tax credits. Now, the focus in these type of cases is all about the integrity of the resolution was particularly undermined by many factors such as whether they are properly been made, whether the presently entitlements to the beneficiaries been identified. So this is a common issue which is happening as we speak. Now, in conclusion, I just want to say practically the decision is another reminder that the sole director companies can only make distribution by way of resolutions. Generally, for trust distribution, this means that the sole director must not only determine how distribution are to be made, but also record by way of resolution the decision by no later than 30th of June in the relevant financial year. In contrast, for individual trustees or the trustee companies with more than one director, any decisions subject to terms of the relevant trustee can be made up and until 30th of June and then later got documented by a way of minute of meeting. Again, subject to the trust instrument, where a trust has derived a capital gain and it will be streamed, it should be possible to delay any decision at all until 31st of August, immediately following the end of relevant financial year pursuant to the provisions under the Tax Act. So guys, be aware, be vigilant, make sure there is no backdating of trust resolution minutes. It's against the integrity provisions. Safeguard yourself. If you need more help, more understanding of the taxation of trust, your expert advisor is next to you, a phone call away, or just a DM. This is Sabby, your trusted tax advisor. See ya.